The Federal Reserve, better known as the Fed, is the central bank of the United States. But why do we even have it in the first place? To answer that question, let's go back to the panic of 1907. The president of the Mercantile National Bank, Augustus Hines, along with his brothers, attempted to artificially inflate the stock value of his family business, the United Copper Company. But their great plan failed, and the banks tied to them suffered massive losses. One of those banks, the Knickerbocker Trust, saw its reputation collapse, leading to a run on this bank as well. As fears spread, depositors withdrew funds from more and more banks. Saving Wall Street from further disaster, J.P. Morgan personally organized a bailout, rallying other bankers to inject funds. His intervention stabilized the markets, but the crisis exposed the fragility of the U.S. banking system. Without a central bank, there was no clear authority to provide support during this panic. That all changed when Congress passed the Federal Reserve Act in 1913, creating the Fed. Today, the Fed does a lot more than just prevent bank failures. It regulates inflation and employment by adjusting monetary policy. It stabilizes the financial system and prevents economic crises. It supervises banks, making sure they play by the rules. It also ensures that payments, checks, electronic transfers, even credit card purchases move safely and smoothly. To accomplish all of this, the Fed operates through three main institutions. The first of which are the 12 Federal Reserve Banks, who oversee the nation's private banks, enforce regulations, and provide financial institutions emergency funding if needed. Then there is the Board of Governors, who are appointed by the president to oversee those 12 reserve banks. The chair of the Federal Reserve also sits on the Board of Governors and is separately appointed by the president and confirmed by the Senate for their leadership role. Finally, there's the Federal Open Market Committee, or FOMC, a 12-member panel charged with making key monetary policy choices, including setting interest rates and influencing credit conditions. While all of this sounds great on paper, the Fed is not without controversy. Some say it has too much power, criticizing its interest rate, inflation control, and bank regulation policies. Others view it as the key to keeping the economy stable. But what do you think? Is the Fed good for America's financial stability?